Alright guys, welcome back. We got a very interesting situation here on the euro versus the Australian dollar. I was tracking this one very closely, waiting for the right moment to strike. In fact, I had my official trigger level right here at 58.36. Right, this particular key level. I was wondering if price could make it all the way back and to close below that key level, and well, the plan was to pull the trigger if that happens. Take a look at the close we had here last Friday. It's really remarkably interesting. Take a look, 58.33, so that's only 3 pip. It managed to come back, but take a look at its highest high last week. It managed to reach 59.59, right? So that's like 120 something pip above that particular trigger level I was just mentioning, 58.36, and it managed to come all the way back just to close 3 pip below. Now that's impressive to me, and I decided to take action on that particular behavior. Let's have a look at the daily chart to see how things went down, because price was on the upside and was going strong on the upside. Don't forget, we had a few trades here before. We were kind of dancing back and forth. Price was very hectic, was trading in a very narrow trading range, but I think that's the last move we're going to see in this particular trading range. I'm referring to the blue setup, right? So everything since the middle of January, we've seen this pretty volatile movement. But right now, looking at the last few days, so price was on the upside. It was supposed to complete the move by reaching the higher section. But if you remember, I suggested that this should be the last move on the downside because it is the sixth leg actually. So it should be the last one. So when price was actually coming strong on the upside, I was a bit surprised, but then I noticed something very important, right? I noticed that failure, that's a very visible reaction to the 200-day moving average, right? Couple of days here, we're trying to break through. Both of them failed just before approaching the higher section. Now, it managed to come back and closed the week below 58.36, as I've showed you just a minute ago. So that to me suggests that this upside move was just a technical correction, maybe even excess noise. It wasn't a genuine move. It was kind of an overshooting to the upside, and price is back on its natural track, which is on the downside. Don't forget, price is coming from above. If we look at the whole move, price came from above. That was the first segment on the downside. Later on, we saw what seems to be the technical correction, which manifested in a sideways movement. That was the second segment. And at this point, I suspect we're beginning to approach the third segment, which should go again to the same direction price came from. Right, third segment on the downside, reaching the lower section on the higher time scale setup. And here we would like to focus on this particular key level, 54.91, as final destination. Now I'm going to quickly come back again to the weekly chart to show you exactly what I think is going on. So from the big picture, we can see these legs here. We had so far 4 legs in this massive trading range. Right? And we're coming from the very edge of the setup. So right now I feel that we're just in the middle of the way. We still have about halfway to go to reach the lower section, probably even taking the previous lows, but I'm probably going to be satisfied with this particular key level as primary price target. Now it is very important that price will remain below 58.36, and as it moves away from that key level, our confidence on this bearish conviction will grow accordingly. That's about that. Euro versus the Aussie dollar, triggering our trading opportunity here by breaking 58.36, and it should be really fascinating to see how things will unfold here. I'll probably come back to follow up on this one. That's about that for this one. That's about that for today. We'll see you tomorrow.